Hey everybody, Eddie here. Just going to do a quick update for the week. So we had a consolidation week again, and right now it's trading in a very tight range, and I'm looking for a breakout, either break on the upside or on the downside, right? So you see this square right here, these are support and resistance area for this consolidation. So if we can break the highs, which is around the 50-day moving average, and also at the top of this downwards channel. So if you can break this high right here, we're aiming for this high right here. And if that happens, we're breaking out of this downtrend and potentially making a reversal and going back up. Now, if we go up here and we get rejected, chances are we're going to come back and retest this lower here. And if that does not hold, we're going down to like around this 3,400 area, which is the pre-COVID lows. So expect that to happen. Potentially this could be the bottom, but there's still no sign yet because we're still in this downtrend. So you really need to break out of this consolidation area to even consider a possible bottom in the S&P 500. All right, and before I go forward, please like the video and subscribe to the channel. Hit that bell icon so that you get notified whenever I put up a new video. Anyways, yeah, so S&P 500 right here next week, looking for a possible break-on direction. Right, let's take a look at the Qs. Qs are very similar pattern. It is in this consolidation as well, except the 50-day moving average is very close to the in 21, which is good because if it actually breaks above, it has some room to run, right? And same thing, you're looking for this high right here and a possible break of this high. Once it breaks above this high, it's a possible trend change because we'll be making a higher high, right? Whenever you're in a downtrend, what you're looking for is a higher high to for a potential trend change, right? Over here, we were in this downtrend and it almost made a higher high, and then it fell like right at that same resistance and got rejected hard, right? So it's a very similar scenario right here. This is a major resistance. So if we do not break above this major resistance, it can come down hard as well, right? But what it can also do this as well, right? You can go up, test this area, retest this downtrend, and then finally the breakout, right? That can happen as well. So around this area, just be very careful and how it and watch it to see how it moves. And you know, if the trend is good, then if we break out of this area, then we can start deploying some cash again on a pullback, right? And that's the way to replay it. And you know, if you want to enter down here, you can for a longer term account, not really for trading, but for a longer term account, you can start your starting positions from here. And then if we do drop some more, go down to pre-go highs, you can just add a little bit more, right? You can average into the trade if you plan it. I'm not talking about averaging down, which you should never do, but you can average in, meaning if you plan on buying 1,000 shares, you go in with 300 and then you plan like add 200 here, 200 there, 200 there till you reach your 1,000 full position, right? Averaging down means you bought 1,000 and that's all you plan for, and then it drops and you want to buy another 1,000. That's doubling down, okay? And you never want to double down into anything at all. Right? If you plan 1,000 shares and that's the maximum you're going to do for that position, that is your maximum position. So if it starts dropping, you either take a stop or you get out of the trade, right? Or you take a or you trim it and then see if you'll hold. If not, then you know, should get out of the position altogether, right? And you know, that's the proper way to really trade, right? Or invest, right? You never want to go all in all at once when you're investing because you can never time the market exactly where it is, right? So I mean, like you go for a higher probability setup where you potentially time the bottom, but even if you do that, you don't want to go in with a full position, right? If you're going with full position, you better have a stop loss in place so that if it doesn't work out, you can get out the trade for small loss. All right. So both indexes are looking fairly well. If you look at the Fibonacci, we are around that between that 50 0.5 and 0.618 area, which is also the bounce area, support area for the Fibonacci. So if we do bounce off these lows right here, potentially that is the bottom, and then we will go break above, break this high, test 200, and then potentially break out this downtrend finally, right? And the markets usually do bottom around the third quarter. So we're into the third quarter, and there is a midterm election at the end of the year. Usually you get a rally for that towards the election. So let's see what happens this year, because all the seasonality and all the things that was supposed to happen in the past year never happened. So, you know, it might not happen with this either. So that's why I always go with price action. You know, I try not to predict the future. I just go with the flow and watch what the price actions is doing. Just follow the money, right? That's the best way to trade, right? And as of now, like I said, I'm still just day trading. I'm not really looking to open any positions. I do have a watch list being set in place. So when I see the market finally breaking out of this downtrend, I'm going to start deploying some money for some swing trades and for some longer term trades, right? Because I got out the trade completely. Like I got out some right here, and I went 100% cash, like somewhere around this area right here. Even in my long-term RSP positions and everything like that, I got completely out around this area right here. So you know, it's all the way down here. So I save myself a lot of money, and I'm looking to potentially to deploy some of that cash because it's just sitting around right now. So that's what I'm looking to do. Right. So let's take a look at some stocks. Let's go into. Maybe we'll look at small caps first. So IWM is small cap. So you can see small caps, same thing, it's a consolidation. And the small caps is at pre-COVID highs. So it's consolidating right after pre-COVID highs. So if it does break out here, you're looking around this 200-day, and then this is the very hard resistance area right here. Most likely fail the first try. But this is the area that's been consolidated for over a year, so people are looking to get their money back. So, so if it does bounce to around this area, I would take some profits off your small cap and then wait for a pullback before going back into it. Right. And let's look at growth versus value. So, value in the S&P 500 is pretty well staying hold in the same around areas, the index itself, and growth is same thing, right? The chart looks really familiar with each other, right? So there's really nothing set as part except for the 50-day moving average is a little bit further down away from the 50-day on the value stocks, and it's very close to 50-day on the growth stocks. So potentially growth stocks would be the first to rally, and then the value might actually stay around, right? Might just chop around. So we'll see what happens. Right. One of the things I am looking at, and this is like, I know everybody hates ARK right now, but it's actually looking really good on the charts. It's creating a base right here. We're at pre-COVID lows, and the moving averages are setting up for a pop right here, right? Let me see if I turn on my indicators. Yeah, so momentum is starting to pick up, and MACD is going above zero line, so is the momentum. So potentially there will be a breakout off this bottom and test the $70 area. So, you know, that's almost a double from here, right? Into the $70-$80 area. So you'll be a good like 70-80% return on that if it does come up and test this area right here. And you know, throwing a little bit of money in this, it wouldn't be a bad thing. You can actually sell some puts here too. Just to take some shares, or you can actually go with some leaps down here. And if the economy recovers, or if growth names get a little recovery, they can run really fast, right? So risk reward wise down here, the rewards a lot better than risk. So, you know, it's a tradable position at this area. So, you know, if you want to do a small trade, you shouldn't trade anything big right now because it's still volatile markets and it's still a lot of uncertainty. So, you know, trade small. If you want to make this trade, just go for a little trade, or you can buy like a small amount of calls and see if it'll work out, right? Right. So I was looking through quite a bit of these, some of my favorite ETFs, and they all came down substantially. So like BOTZ is one of them as well. It's one of my favorites. And I did take my exit on this because I bought this a few years ago, and I finally took my exit when you start breaking down, right? So I took the initial exit over here, and then I took finally the rest of it off when it broke lows off right here. So I avoided like majority of the downtrend, right? But you know, I hate to see this thing break down because it was I had to take capital gains on it because I held for so long. But you know, you have to do that when things are breaking down. When you have like a big year like this, right, and you start seeing signs of weakness, that's potential exit. That's why I took like half a position off, and then I took another third off, and then finally I took the rest of it off when it broke down below this area right here. So these are the type of things you really gotta do if you want to protect yourself from downside in like bear markets, right? So you know, the thing that I should have done was just completely got out when it broke the 200, but I thought I'd give it some room to see if that holds, since it was in my long-term account and it didn't hold, so I only took half off and then the rest of it off right there. So yeah. Same with Drive. Drive is also an ETF for EVs and stuff like that. So right now I think it's about a 50% retracement down from the high. So it's holding up fairly well. Yeah, so about 50%. So it's holding up fairly well against other growth sectors, and you know, potentially could hold for a bottom right here. So I am looking for volume to pick up and a break or consolidation. If not, this will continue to go down. So don't rush into these stocks. Just have them on your watch list. You know, maybe set some alerts to notify you if you hit certain areas, right? So that's what I normally do when I want to get into a stock. I just keep it on a watch list and then just wait for the signals, right? This is hack also was one of my favorite sectors to be in, which is cybersecurity. So like I'm quite bullish in cybersecurity in the long run, but you know, they had quite the run, and you know, and the sector is just starting to get hot. So you know, I'm waiting for it to come back down and retest, and then hopefully we're going to get a break up from here, because this is this consolidation area right here, and hopefully you will hold. Okay, let's take a look at a few stocks. So Apple's making like a nice bounce off this low, this channel, and then it's testing this high right here. So it is a little bit extended right now. So I'm expecting a little pullback before the test of the 200-day moving average. If you test the 200-day moving average, most likely you'll fail the first time and then it'll break out later on. All right. AMD looking really good. It's bouncing off the bottom of the channel. I would take that trade actually if he breaks above here, and then just trade from here to the 50-day moving average. You see I have the alert right there at 90 to take profits. So if he actually does break above, I would take some profits right here before earnings come out, and maybe just you know, if earnings are good, you can fly. So maybe I will do an earnings strategy for options for a small risk play. Amazon, base thing, stack moving averages. There's a lot of up room right here, so we'll see what happens. Anyways, I'll talk to you guys later. Have a good one.